markets are back to business as the euro rally and the yen decline continue. Euro-dollar extended its recent rise and broke the 1.36 level while dollar-yen also jumped above the 92 level. The break of a near-term channel resistance in dollar-yen showed that it might be accelerating again. The two main trends are sending euro-yen through a key 123.31 resistance level while also indicating further medium-term strength ahead. Also, sterling was taken up by euro as British pound Japanese yen also broke through the 145 psychological level while British pound US dollar also extended its recovery from 1.5673. The Australian dollar was unpinned by weak China data as well as PPI and dipped against the dollar whilst Euro-Aussie broke the 1.31 level. In Japan, it's reported that Prime Minister Shinzo Abe is close to completing a short list of candidates for the next Bank of Japan governor. Economics Minister Amari said today that there is no need to revise the bank's law about its independence. But it's widely believed that Abe will choose a policy dove who has the same philosophy as him and would help him implement his Abenomics through aggressive easing. Data from Japan saw the unemployment rate rose back to 4.2% in December versus expectation of 4.1%. House spending dropped 0.7% year-on-year in December versus expectation of a 0.2% decline. China's manufacturing PMI unexpectedly dropped to 50.4 in January, down from 50.6 in December and was lower than expectation of 51.0. Though, the HSBC manufacturing PMI was revised up to a two-year high of 52.3, up from preliminary reading of 51.9 and last month's 51.5. The data showed that China's manufacturing activity is back in expansion mode and will probably stay there. However, strength of the expansion could still remain modest. Australian PPI rose 0.2% quarter-on-quarter in Q4 compared to expectations of 0.3%. The Australian dollar remained weighed down by this data. Looking ahead, UK PMI manufacturing will be the main focus in the European session and is expected to drop slightly to 51 in January. The British pound had so far been the weakest European major, but Euro-pound's rally is taking a breath for the moment. Any downside disappointment in the PMI data today would likely trigger another rally in the bear. Also to be released in the European session are Swiss SVME PMI, Eurozone PMI manufacturing final, CPI and unemployment rate. Heavyweight data will be released from us today. The non-farm payroll is expected to rise 155,000 in January while the unemployment rate is expected to be steady at 7.8%. ISM manufacturing index is expected to drop to 50.5 in January.